What's up, everybody, and welcome to a new video. Uh, I'm your host, Diogenes. I'm gonna try and go over some trades I took uh, Wednesday, May 29th. All right. So we were in London, and I woke up. Somewhere right here, and I immediately was looking at the charts in the M12, M12, and I saw that we were still in this range. We took this liquidity, mitigated this huge BPR or this huge zone, and we were making our way back. So I saw that we just mitigated this area and dropped. So I went to the M1. So there was there was like there was this huge zone right here. Okay, there was this huge zone that we broke to the downside, and knowing that we were in like bearish order flow, I was waiting for some kind of setups at the 50%, right? So here was like the first tap here, and then the first fake flip. All right, those are like toilet paper, guys. They went short at this breaker and this unicorn. All right, so we come back and liquidate them and create this valid high right here when we close under this candle. All right, so I just shorted this retracement here, okay, and targeted this low right here. So this was my first trade. All right, simple and easy. For this kind of trades, right, when the zone is huge and we have some kind of structure like here, there's also another way. I do trade this kind of zones, right? So for me, this is like a huge deal in range because we took this buy side liquidity, right? And then we took this sell side liquidity, right? And this also, okay? So which makes this a deal in range, right? Now I want you like to remember some stuff with me here, and you'll see why, because we will talk about it in later setup. All right, so when it comes to the dealing ranges, okay, so we take the buy side and we take the sell side, and we need to create some inducements before we take the trade at 50%, right, at equilibrium. So normally when we take the buy side and the sell side, we have some measure of accumulation, which always have some high, all right? So I learned this from my TCM experience, all right? So we wait for the accumulation to end, and then we wait for price to come back to some kind of fair value, which is usually some kind of order block at equilibrium, or like here, there was this huge FVG also. All right, so you also you just wait for confirmation here. All right, so you usually will find a breaker or another, like this setup will form here, the same form like at seconds time frame, right? So this candle we took the buy side and we took the sell side. We don't always retrace the 50% in lower time frames because we need like we took this liquidity and we need to close back fast. So that's why usually price here is violent. All right. There's lots of stuff I can show you guys after because you can also use MMXMs in the lower time frames here. But I will show you guys in a later video. I don't want to make this video very long. All right. Moving up. So after I took that setup, okay, which was here, and price melted here, and we took this 1 hour liquidity, okay, or low. So when we take a higher time frame low, we are price is prone to accumulation, all right. And what did I tell you about accumulation? It's like you never trust it because either we will range like in here, or we will create some nonsense price action where we won't always respect like the structure, all right. So we took that high, right? I was here, okay. So they took the low at first, and they traded back. And if you follow Dave, he always talks about when we take a low and we create a fake wick. This actually always happens at a low or a high. We always wick. We have a measure of fake wick, and then we come back again to close under it. All right. So when I saw this fake zone getting created, and this was like a liquidity cycle, something you can learn from the guys from Lit or liquidity inducement theorem. So they always like create a manipulation zone, and then they take its high, all right, and target is by design this low, all right. So this is a small scalp you can take. This they call this like the transaction fee or something like that. But I still didn't take it because I was waiting for a zone to be created, right? And this was it, okay? So this was the zone. Also, I knew that we were in accumulation, but I knew that I can at least take some one-to-one, right? So again, this was my zone, okay? And this is type 2 zone in which we close under the zone. We make the first step, all right? And then we close under, create fake zone. I call this the fake zone, right? Because we never took the 50%. And we have like some indices or some market is telling us that it will come back here because of this unmitigated portion of price, all right. So this if you go to the M5, this will be just a wick on the M5, and then we close here on the M5. So this whole setup is just a facilitation of the same setup happening on M5, all right. So that's why they take the first tap and they make their double top here, all right. So as I showed you, like this is the first, this is the sweep, all right. So when we have this kind of setups and we have our POIs like in head, we just wait for our flip, right? And we engage. So this is the flip, right? Either so the flip is just a wick which gave like a crazy entry, but you can always engage at 50%, all right. So you engage at 50%, you put your stop above the flip, and you target the lows or the one-to-one of the zone. It's up to you guys. Okay, guys, I had some questions about those flips, and if you're not accepting this risk here, yeah, and if you're not okay, because they can still sweep another time here, if you're not okay with taking another trade after this is getting stopped out for the max RR, you can always just cover the zone, and you'll still have a nice RR. All right. So after this trade, this close here, um, I didn't like it because it was just a wick on higher time frame. All right. So I was just watching price, and the moment we swept this high and flipped and went down, I knew we were in some kind of range. All right. With this was top of the range, and this was low of the range. All right. So the moment this happened, okay, I knew we had that situation. And what we do in those kind of situation is like we try and see and look for the highs, right, that happened before. So what you gonna do? So this is the high at top of the range. We mitigate some kind of something here, right? We wait for price to top something, right? We wait for price to top something and flip, all right? So we sweep, all right? We tap into some top of the range, all right? And we flip. So you take your flip at 50%, all right? And you always cover top of the range, all right? You go for a 1-to-1, okay? You can go for 1-to-1, which is like always granted, or you can target low of the range, all right? Or some kind of low closer, liquidity closer, like look at this reaction here, okay? Again, we wait for the low responsible of this high, okay, to be swept, and wait for the flip to happen, all right? And then you engage again. You can enter aggressively, put your stop always under low of the range. You can also always target like top of the range or liquidity or some kind of 50% of unmitigated zones. Look at this, because look at the reaction it gave, okay, this unmitigated zone. So you always target obstacles you find in your way, all right? They always work, okay? So this was setups that were present in here, okay? And then we were like so close to market open, okay? I was looking at here. I knew price would go to this 12-minute here. For me, this 12-minute order block has created a lot of imbalance, and for me, it's the order block responsible for taking this high, right? So price needed to do a reaction off of it, and it's actually like magic reacted from exactly the 50%, all right? So we were here at market open, all right? And I was waiting for price to mitigate, give me an entry at 50%, right? Which never happened. And the reason why it never gave me the entry is concept. I will show you guys after. It's because this range is already balanced. Look at how many wicks we have. Look at how many times we traded. We put green and black candles in this range, all right? So price, actually the inefficiency was between this and this when we were here. So the last up green candle was here and the last up down candle was here. So we needed to print green candles just here. All right, we don't have to go back to the 50%, but that's an advanced uh, concept I will guys tell you about later. And credits to TCM again for showing us this. All right. So the moment I saw this CSD or this valid high being put, I knew that price is going without me, and I just let it go. I didn't take the trade. All right. So market open comes, reacted. We reacted just just before, just from the 50% of the order block I told you about in M12, right? And here I was like sitting with my good friend Mark from Omaha in his stream, right? And we were trying to take some easy trades from his concept. He calls the Omaha zones, all right? So first trade I saw, okay, I saw this this M12 zone, right? This one, okay. And we see the displacement out of it, which made it like a high probability one-to-one to trade, potential trade for me. So I entered here with some micros here, my stop off, and took the 1-on-1, which was crazy fast. Like we took lots of money in like 2 minutes, all right. And I was waiting again for price to go back to at least this 50% of the zone that we took with like again we took with displacement. So I was willing to take another 1-to-1 here, right? So yeah, price never came here. This FVG did its job. Again, same concept. This range is balanced. Look at the back and forth in price. We only needed to print. Look at this, guys. It's crazy, right? Look at the precision of the concept. So this range is balanced. We only needed to print a black candle here, and check this out. Look at the precision, right? Crazy. So this is why price sometimes never come back to the 50%. And when it's efficient and they have like some objectives, they just close the inefficiency and they go for it, all right? This is true inefficiency. That's how you do it, okay? So I was still sitting here, okay, and I was with my buddy Mark. I was looking at this again. This range we close again with displacement. Also, I knew that we were like counter trend, but I like to check them because when we close with displacement, they tend to always work. All right. So again, we took it live yesterday. We just took the 1-to-1 here, okay, and it actually worked, okay, to the tick, okay. So don't be greedy, especially counter trend. You take the 1-to-1 and move on with your life, all right. Oh, and by the way, we also were waiting for this zone to give us the 1-to-1, okay. But again, this range was balanced back and forth. price didn't need to go here. It just needed to print a black candle here. So this FVG was enough. Guys, please, I want you to pay attention to this inefficiency paradigm concept. I will guys teach you later more about it, but it's why actually price never come back to the zone, and a valid low or CSD here is enough. When inefficiency is done, you can take the trade as up. All right. Now let's talk about the zone created, the dealing range I was talking to you guys about at first here. Remember the one I took in London? So there is this concept, okay, from TCM again, in which he told us that the first tap in the dealing range of the day, or the first tap in equilibrium is always inducement. All right, it's always end up being taken. All right. So we were in this like huge 12-minute bearish range, all right? And I knew here in M1 price were like bullish, but I knew also that in this huge M12 range, which was also balanced, look at the price going back and forth in it, really balanced. We didn't even need to go here. At top here was enough for price to melt down, all right? So and then again we have the concept of the zones in the zone, right? So this was for me the only unmitigated zone left in this huge 12-minute, right? So I knew, and we have the dealing range concept, and I saw how we wicked it, all right? We never closed above it, and we didn't show like intention of going above. So the weekend showed me that price were actually weak, and we were ready to come down again. All right. So with this being in mind, I was starting to be really cautious about longs. All right. But at the same time, we had this zone, right, that we closed above with good intention, right? So it was the perfect one-to-one contender for me. So I took the one-to-one here again, okay? And the moment we guys made this valid low and this valid high, okay? So here we failed. This valid low's job was to take this high, right? So the moment we create valid high here, we failed to take this high. So this low failed to do its job. So the moment this happens, I have in mind the range situation. I always have it in mind. So I go and see what's happening with price, all right? And you can always find something like that. This was like top of the range. You can also trim it to the last range, and this was low of the range, okay? And you can trim it to this order block, okay? So here I will guys show you two ways of trading the ranges, okay? So you either feel like super smart and wait, as I showed you before, for any low to get swept, and we flip and we go long, right? 1-to-1 or target high of the range, yeah. Or if you're like me yesterday and I was feeling a little bit like lazy, I was taking every 1 to 1 when it came back to the 50%, right? And I kept taking them, right? I kept taking my 1 to 1s. When most important thing is risk management. So risking a fair amount in every setup, right? I kept taking 1 to 1s, right? Like that. Till I got stop loss there. Okay. And when I got stop loss, I was done for the day because I milked the market very well. I knew also, although I knew we were coming down, right? I didn't bother that much. I was done for the day. Okay. I made like good money. So yeah, I'm gonna end this review here, and I hope this helps someone somewhere. All right. So yeah, that's it for me, and good luck and good trading, guys. Ciao, ciao.